You're 26. You've got $8,000 sitting in a savings account, and you've been staring at it for 3 months. It's not growing. Your bank's paying you 0.4% interest. That's $32 a year, not even $1 a day, less than your morning coffee. You're not broke, but you're not building anything either. You're just holding water in your hands. Then a coworker mentions something at lunch. He says he threw some money into something called VU. You ask what that is. He says it tracks the S&P 500, 500 of the biggest companies in America. Apple, Microsoft, Amazon, Google, all of them. One ticker. You go home that night, you open your laptop, you're reading for 4 hours straight. You find out the S&P 500 has returned an average of 10% per year over the last 30 years. You find out most professional fund managers can't even beat it. You find out Warren Buffett told his own wife to put 90% of their money in it after he's gone. You close the laptop at 1 a.m., then you open your brokerage account, you buy $8,000 of VOO. You go to sleep, you're 27, the market drops 11% in 6 weeks. Your $8,000 is now worth $7,100. Your stomach drops. Your mom calls on a Sunday, asks how you're doing. You say you're fine. You don't mention the $900. That night, you're on Reddit. Everyone's selling. Headlines are screaming recession. Some guy says it's going to drop another 30%. You almost sell, but you close the app instead. You remember something you read that night a year ago. The market has crashed 27 times since 1928. It has recovered every single time. Every single time. You don't sell. You throw in an extra $500 that week instead. Your coworker dumps everything at lunch, says he'll buy back in once things calm down. He never does. He misses the recovery, misses the best 10 days of the year, the days that account for nearly all the annual return. You don't say a word. You eat your sandwich. You keep your shares. Most people quit here. You didn't. You're 29, $31,000 in VOO, no raise, no windfall, no lucky break. You just kept adding $600 every single month for 2 years. Treated it like rent, non-negotiable, automatic, gone before you could spend it. The market recovered. Then it kept going. Your $8,000 is now worth more than you put in. You do the math on a Saturday morning over coffee. If you keep adding $600 a month and the market does what it's always done, by the time you're 45, you're looking at something close to $700,000. You read that number twice. You type it again just to make sure the calculator isn't broken. It's not broken. You sit back in your chair. You think about your dad. Worked 38 years at the same company. Retired with a pension, paying him $2,200 a month. He's grateful. He means it. But you're 29, and you're building something that's going to pay you more than that. No boss, no pension, no 38 years in the same building. You close the calculator. You go for a walk. Nothing's changed outside. But something's different now. You're playing a game most people don't even know exists. You're 32, $74,000. 6 figures is close enough to feel real. A buddy from college calls. He just bought a house. He's pumped. Says the market's too risky, that real estate's the only real investment. Says his house is going to double in 10 years. You listen. You congratulate him. You don't mention the $74,000. You don't mention that your index fund has no leaky roof, no property taxes, no 3 a.m. maintenance calls. You don't mention that his mortgage runs him $2,400 a month and yours costs nothing. You don't argue. You already know something he hasn't figured out yet. You might both be right. You just picked the version that lets you sleep at night. Loud money disappears. Quiet money compounds. You're 35, $148,000. You get a promotion. Salary jumps $14,000. Most people at this point upgrade everything. Bigger apartment, newer car, better version of their life. Not you. You bump your monthly contribution to $1,100. Same apartment, same car, same life. This is called lifestyle deflation. Nobody talks about it. Nobody makes it look cool. But this one decision is going to be worth more than the raise itself. 10 years from now, that extra $500 a month buys you something no salary ever could. Options. You're 38, $248,000, $250,000. The number your grandfather thought only rich people had. You're not rich. You're just a regular person with a regular job who made one regular decision every single month for 12 years. The market had 3 rough years in that stretch. You kept buying. The market had 2 incredible years. You kept buying. You didn't time anything. You didn't predict anything. You just showed up every month like clockwork. Your colleague at work is stressed out, makes more than you, drives a leased Range Rover, just refinanced his house to redo his kitchen. He's 38 and starting over. You're 38 and halfway there. You never told him. You never told anybody this isn't a secret you're hiding. It's a life you're building quietly. Loud money disappears. Quiet money compounds. He's 38 and starting over. You're 38 and halfway there. You're 41. $412,000. The math starts doing things you didn't expect. Your money is now making more money every year than you're putting in. Think about that for a second. You're contributing $1,100 a month. That's $13,200 a year. But at historical returns, your $412,000 is generating more than that on its own. Your money has a job now. It works while you're sleeping. It works while you're sitting in meetings you didn't need to be in. It works while you're stuck in traffic on a Tuesday afternoon, wondering if this is really all there is. It's not. You're almost there. You're $687,000. You open your investment app on a Wednesday morning before work. You stare at the number. You think about yourself at 26, staring at $8,000, earning $32 a year. You think about the night you almost sold during the crash. You think about all the friends who called the market risky while taking out second mortgages. You think about every single month you kept contributing when it felt completely pointless. Then you do the math one more time. At 4% withdrawal, $687,000 throws off $27,480 a year. Tax advantaged, passive, yours. That's your rent, your groceries, your gas, your phone, your subscriptions. The basic shape of a life, all of it, covered forever, without selling a single share. You put your phone down. You make your coffee. You sit by the window. Outside, the street is filling up. People rushing, running late, stressed about things that feel urgent right now and won't matter in 10 years. You used to be one of them. You're not in a hurry anymore. Your money has a job now, and it never calls in sick. You're 45, $741,000. You walk into your boss's office on a Monday morning. You're calm, no anger, no speech, no drama. You just say, "I really appreciate everything, but I'm moving on." You shake his hand, you walk to your car, you sit in the driver's seat for a minute. You're not thinking about what's next. You're thinking about a Tuesday night almost 20 years ago. A laptop, 4 hours of reading, one decision, $8,000, one index fund, one rule: keep buying, never stop, never panic. That was it. That was the whole strategy. No stock picks, no hot tips, no market timing, no complicated moves. Just one boring fund, held for 19 years. And now you own something no paycheck ever could have bought you. You own your time, you start the car, you drive home. You've got nowhere to be. The best time to start was yesterday. The second best time is right now.